Hey, good morning. It is Julie, and it is Saturday, June 13th, and I am going to be taking a look at the market yesterday and this last week, and show you something that I have found, and maybe it will help you as it has opened my eyes. When you're in the market and want to make a determination of which direction the market is moving, it's difficult to get a handle on that for everyone. We do basic things to make sure that we're going in the right side of trend so that we can take advantage of the bigger flushes, down moves, or up thrusts in a bull market. And the markets change from bear to bull interchangeably. So you can't say that I'm a bull and then not be able to flip to a bear with just snapping your finger. So I've learned not to get married to a side or a position, but remain flexible. And how we do that is by determining, are we above or below the yesterday value area, the yesterday 1 hour initial balance, the yesterday VWAP, the yesterday point of control. Where are we trading relative to that? The value area is the 68% or 70% of the bodies in the range. And the VWAP or point of control is the middle of that level. So when you say that we're trading above yesterday's range, the range is from the high to the low. When we say we're trading above yesterday's point of control, that is a more narrow, specific 50% between the 68%. So it's the midline between the 68% of the range. So, and bar direction is just simply staying out of a trade when it's going against the bar direction you're relative to that previous period. And you want to stay out and not trade them because they'll fake you out and make you think that you've got a counter trend trade back to the previous range, but it usually will whip right up on you and knock you out before changing and then returning to a new direction. So these little V-shaped moves in crude, I have found, are transitory. When I see a V-shaped move like that, I know the market is transitioning and getting ready to make a position change. So we're changing from long to short. And that change occurred yesterday. We're coming back into the previous value ranges, but you've got this consolidation here on this left side of the chart that's being heavily defended, and price is not able to get down any further. We could not go into the day before that's level to fill that gap yesterday, and the market participants got slaughtered yesterday. More money was lost in the crude market yesterday probably than in a long time. Look at this just flat chop. I am so blessed that I wasn't even here trading it. I'm sure I would have knocked another combine out, because I would have been taking these short and just gotten chopped up. So market context, meaning you're printing lower lows on your higher time frame or higher highs on your higher time frame. And for a day trader, the 30-minute chart is your miracle chart, because if it's trading sideways, the only way to even participate, to scratch out your daily bread, is to draw a line and do the bracket. And when price hits that line, you enter short. and that's it. That's the only way to trade this. Once you start seeing the sideways candles, you put a bracket up, and when price hits it, you're entered in for a short. And the only thing you pray is that you've left yourself enough room to escape a stop out. But even if you get stopped out once, you should put your mark back on that bracket and try again. Unless the algos and the market makers get wise that this is a bracketed market, they're going to be spiking it on that line. So they're going to try to whip you out. You just got to hold your line and hope that your stop's big enough to make it to the other side of the line. In this case, it would be all the way to the other side of the line because the mean was nothing. This was just such a tiny, pathetic range yesterday. So crude is stalled and may lead us to another bull market, but right now, today, the market is turning down. I am going to be trading my system here of looking for entries only in direction of previous range, and when price is outside value or in value. In value, you're going to get chopped up. Just trade the bands. And when it's trading outside value, that's really the only time to put position size on and just capture it if you can. So this is Julie. Hope this trading example helps you. To show you what I'm talking about, this is from May 25th to June 12th. So we're talking 3 weeks in the market and 2% profit target. And this was just the RTH session, so only from 8 to 1:30 Central, and which is the choppiest time to be in the market, and included Friday. So I'm saying you can make money in this market, and I'm learning how to do that and how to put my trades on and how to get a strategy that will start out profitable from the very beginning and go profitable the entire way down with minimal drawdown. So I sit here and I look at my times of day. What are the best times of day for my strategy? When to expect the strategy to go counter trend. And really, once you start analyzing your days of the week to know what day this strategy made money on every day, but well, it didn't make money June 8th, and it did not make money yesterday, which was an impossible day to make money. So but it held up well, overall, comparatively. So find a strategy that suits your style of trading. Don't worry about trading every single tick or run, which I'm teaching myself. Just because it's going outside value, do I really want to take that trade? Or do I want to wait for price to get back in line with my objective, where I'm going to be able to make more money? So that's my trading lesson for today. I'm learning. It's a continual evolution. Back test, find something that's printing winning trades, and go after those moves when you see the opportunity. Thank you.